India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Lata Venkatesh, with me Surabhi and Rima, and on behalf of all of us, a very happy Christmas to all of you out there.
Merry Christmas.
Merry Christmas to everybody.
Yeah, it's the season to be jolly.
Absolutely.
And,
season to party.
As you can see, we're trying to do our little bit. We're in Christmas colors here as well. But I think the street is going to be happy because Santa finally showed up. And bulls will hope and pray that Santa stays for a while, doesn't leave in a jiffy.
Well, I'm not sure how seriously I would take Santa's visit yesterday. In fact, let me start on that note. We did see a bit of Santa more emphatically in the US. Even they had about 10 days of lower closes. And then for the last 2 days, they have seen some green on the screen. Yesterday was clearly emphatic on the NASDAQ. Coming up, 1%. It was very clearly a positive. But I don't know how much of that is going to brim over to emerging markets, because the other indicators were anti-emerging markets or not clement to, EMs, especially the dollar index going back above the 108 mark, and the yields, which fell a bit because of the PCE inflation coming in as a little lower than expected. Even that went back to the 4.58% mark. Bond yields higher and dollar index higher can never be good for countries like us, because it is so tempting to be in dollars and to buy absolutely risk-free US bonds, which will give you 4.58 and perhaps a little more because of the currency appreciation. Now, what was happening in India, the rupee fell, and that's the important part. It closed at its lowest point of 85.12 or 85.11, despite the fact that we had a positive equity closing and we had dollar index dipping below the 108 mark to 107.6 at one point in time. It looked fairly good, but the rupee did not take any of the positives because there was a lot of importer buying. The moment you get it below the 85 mark, there was a lot of buying, and it went back and closed higher. So once again, the FII buying yesterday, no, it wasn't buying. It was selling. It was only 170 crore, but that was not because they seemed to be wary of selling, but probably more because of holidays, that people are not out there to work. So that's why I wouldn't take Santa's presence on Monday very seriously. It seems to be more because the FIs were not selling in all their fury.
Yeah.
And therefore, people stayed away. The only Santa I see in the picture is in tech stocks. Both NASDAQ is higher, the dollar is stronger. For every very good reasons, I would think the tech stocks can still stage a rally today. But I leave it to Rima and you to decide for that.
But I guess the markets had such a drubbing in the last couple of months that even if it is a false rally, the bulls will take it. For what it's worth, at least it's not sort of splashing the screen with all kinds of red. And maybe they'll hope for some of that, even if it's a false rally or a rally that you don't really believe because the FPIs are away. Yeah. But for what it's worth, maybe, the bulls will hope for more of that, because we're seeing that play out across a lot of the regional markets as well. Trade is very thin. Volumes are very light. Markets like Australia, Hong Kong, even Singapore, I think all these markets are closing out very, very early for the Christmas holiday. There's no trade tomorrow. So let's see. Volumes have been on the dipping side. But there's interesting news and data out of Japan, so I just want to put that on the table. First, the BOJ minutes. Remember, the Bank of Japan did not hike rates because it was waiting and watching to see what the Fed does, what the implications are going to be once Donald Trump takes office. But we know that inflation has been rising in Japan. The last print was also higher. That's exactly what the minutes note. They're saying that if inflation moves along expected lines, if it keeps trending higher, then rate hikes are possible, and the BOJ may reach 1% on its benchmark rate by late 2025. So that's interesting. And I think that's the market's expectation as well, that the BOJ is not going to reverse gear so easily. If inflation is trending higher, it will come out with hikes, but it's being very measured, looking at the international picture as well. More news from Japan. Honda is the biggest headline in the region in the last 24 hours because of the merger talks with Nissan. The shares there are surging 15, 16%. And not just that, Honda this morning announced a massive buyback. Honda is buying back 24% of its equities. It's $7 billion buyback that Honda has announced. So the street is absolutely loving it. That's a big headline in the region as well. Quick word on oil prices, fairly range-bound. Actually, yesterday oil fell. It was down to almost 72. This morning, there's a bit of a pickup once again. But the forecast that I picked up this morning is really encouraging, at least for us here in India. This is Macquarie saying that the average for the year is going to be about 70.5, which is so much better from the near 80. That's where, if you talk about the average in 2024, then oil averaged close to 80. So it will be a whole $10 lower. That's the expectation as we get into the new year. So that's good news. So we've discussed, of course, the pullback on our street yesterday, backed largely by domestic buying. Domestic buying was pretty good, actually. Once again, clearly domestic mutual funds have not gone on holiday mode because they're very active in the market. But I think the sector that I'll focus on today is going to be telecom, and Rima is going to tell us more about it. Little unusual. We've not heard the government or the regulator come in and talk about tariffs or product pricing. But yesterday there was a note, and there was sort of some chatter in the form of recommendations that should telecom service providers think of bringing back the pure voice packs, non-data, just pure voice small packs. And TRAI said that this would be very helpful for people in rural areas, particularly elders who perhaps don't need the data. So very interesting. It's a recommendation. It's not a diktat. How will the market take it? How will the companies take it? That's what we will wait for. And Rima must have already been working the phones to try and figure this out. So there's more coming from her on this in just a bit.
Well, let's get to the good news, right? Across the world, many markets are shut early today. The not so good news is that we've got a full trading day. But US markets shut today. But even in Asia, you've got New Zealand, Australia, Hong Kong and Singapore. All these markets will be shutting early today. So it's indeed going to be a holiday thin trade. And tomorrow, across the world, global equity markets are shut. There was also weak economic data coming out of the US. There were two key data points. One, the Conference Board's Consumer Confidence Index fell to 104.7 in December, lower than estimates of 113. And secondly, the non-durable goods orders have declined by over 1% in the month of November. But you know what, guys, I'm feeling the Santa spirit, and I think there is going to be a little bit of a supportive environment for equities, just purely because that FI selling is out. Right? That was such a big headwind, and now that it's out of the way and domestic buying is very much intact, will, at least on the liquidity front, you've got that support. And plus, even the IPO action, which was sucking out so much liquidity, now that's come to an end. Towards the year end, there are no new IPOs which are asking investors for subscription. So at least on the liquidity front, I think the environment is a little bit more supportive. But of course, it's not fundamentals, but it's on the liquidity front.
Yeah, mice can be at play when the cat is away.
Oh, absolutely. But guys, by the way, I'm sure all of us have noticed here in Mumbai, the city is decked up like never before for Christmas. It's very, very festive out there. So I'm sure market participants, portfolio managers, money managers, they themselves will look out for a couple of good, fun days ahead. So on that positive note, let's get started with the equity call of the morning. We have Sehadri Sen of MK, who says that a strong market and enhanced flows have pushed the share of equities in household domestic savings nearly 2 times to 31% since FY16. As per their estimates, he says the Indian market is therefore more resilient to FPI selling, and the trend is here to stay. He sees lower fixed income yields, among other factors, continuing to push savers towards equities for another 8 to 10 years. He says domestic mutual funds are more exposed to small and mid caps than FPIs and are taking more active sectoral bets. He believes this will continue driving small and mid cap outperformance and be a drag on heavyweight sectors like financials and staples.
Okay. Well, that is a positive. It's something we underestimate. The inflation targeting regime, bringing yields down, has, directionally changed Indian household savings. But that puts greater responsibility on mutual fund managers to deliver. Well, on that note, let's invite our first guest of the morning on this festive Christmas morning. Mark Matthew of Bank Julius Baer joins us. Mark, good morning, and really grateful that you're taking time off on a holiday season to be with us. A very, very happy Christmas to you from all of us here.
Merry Christmas to you too. By the way, it is a work day here in Singapore.
It is a work day in India as well, and we work on Jan 1st as well. So I think we steal a march over the others. But to come back to markets, we continue to see the US exceptionalism playing out. Are you seeing that peaking any point? That the dollar doesn't rise anymore, US yields don't rise anymore, so money comes back to emerging markets anytime in the next quarter of 2025?
I can't really speak for the emerging markets, but I do think the US market is putting in a top, and there are three reasons for that. The first is that the market is expensive. It has only been this expensive two times before: the dot-com bubble and the pandemic stimulus bubble. The second thing is that the breadth of the market is narrow. Less than 40% of the S&P member companies are trading above their 50-day moving averages. And the last thing is that we saw in the Fed statement and summary of economic projections last week that inflation is a concern for them. If memory serves me right, the number of the number of the Fed officials who contribute their forecasts, who felt that there was upside risk to inflation, that number went from just 3 in September, which was the last time they released their summary of economic projections, to 15 out of 19. In other words, almost everybody. And I think I can't entirely see why inflation should go up, but I think it is a major risk. And so that's the cherry on the top of a peak in the market. If all of a sudden we're not talking about the Fed cutting rates anymore, maybe even talking about them tightening.
Let's follow up. If you expect the US markets to top, where would smart money go? Would it come to EMs, and what would be the pecking order in EMs?
Well, it depends on why it would peak. I think it would probably go more into, I'm not exactly sure. I think it would go into cash, to be honest, in the beginning, just to figure out what the lay of the land is. But emerging markets, I doubt they would be first on the list of things people would look to when they are de-risking into a rising rate environment.
And maybe one of those reasons is because we don't know what's really happening with all these tariff wars and what direction US policy will take, which emerging market will get penalized and how, right? Mark, hi and season's greetings to you. So on that, so we have to watch out for, obviously, as you said, the direction of inflation in the US. The rate cut expectations have been tempered. Now, when Trump takes office, what are the key things that you'll watch, and how important is it going to be for markets? What should we track once the market comes back in January, post-New Year?
Well, lots of things. Whether they'll be able to cut or extend taxes, cut taxes or extend the existing tax breaks, whether they'll be able to deregulate major sectors of the economy, whether they can cut excess spending in the federal government. Of course, relations with neighbors, principally Mexico and Canada, where they've threatened 25% tariffs on both, relations with China. So many different moving parts. If I may say, in general, I think they will be able to do some of what they've said, but if I had to put a number on it, maybe 20%. It's not so easy to do these things. But the net effect, I believe, would be accretive to US GDP growth and therefore indirectly inflation.
Mark, hi. Are you of the opinion that the Indian equity markets too are topping out?
Well, if the US goes into a bear market, I can't really recall previous instances where India didn't go down as well. So in a major, in excess of 20% fall in the US market, I sincerely doubt the Indian market would be able to withstand that. I'd like to just say that we're not saying that the top is in, but we're saying that there's a process that we think is unfolding where top is coming. And we don't like to sell before the top, so we're fully invested, but we are foreseeing an occasion, some point next year, where the market will have a sizable correction. And when I'm talking sizable, I'm talking in excess of 20%. India would go down too.
That's a big call, Mark. I mean, that one that's going to stand out in our minds for sure. Let me just ask you, why do you feel that the US could correct by 20%? I take the point on inflation, but if growth continues to be as strong as it did, I mean, there's no recession in sight, right? Early 2024, everybody was worried about recession. Look at it now, 3.1% GDP print, the last GDP. So if growth remains so strong, then will equities really sell off in this fashion?
Well, you know, what I'd say is that in my little career, what I've noticed is recessions are impossible to predict. The economists who predict them are just lucky, that's all. And you can look at so many studies to show that. Hardly any of the recessions that have happened were called for by the majority of economists within a year prior to them happening. So as much as Trump is pro-growth, which he is, I could give you several examples from Grover Cleveland to George Bush Sr. of other pro-growth, pro-market presidents who came into office and there was a recession. That's the nature of recessions. They're very difficult. There's so many, there's millions of moving parts in the economy. So forecasting them is, I think, practically impossible. So now that I've said that, I'll also say that the other problem with the U.S. is that it's gone up 60% in the last 2 years. And so it's expensive. It has only been this expensive twice in the past. And that makes it vulnerable to a correction.
Okay. Well, point taken, Mark. For starters, the conference board data was not very good. So there are, small red flags here and there. I know Mark is not giving us very good news, but over the year end, it's always good to be warned of what can happen. That also is a Christmas gift. Thank you very much, Mark, and I hope you have a brilliant 2025.
Thank you.
Well, that's the word coming in from Mark Matthew of Julius Baer, warning that the US may give us a scare. Personally, I'm worried that it may give us a scare because of an accident like cryptocurrencies or something like that.
Yeah.
More than growth slowing down, which can happen, a little more slowly. The big fear of giving boost to something over which market regulators have no control.
Well, and there are lots of crypto bulls in this new administration. So let's see, it promises to be an interesting ride. Let's quickly move on and tell you what we've got coming for you on the show today. Lots of corporate interactions that are lined up at 8:35. We'll be speaking with Ashish Rai for Orient Pro Solutions. The company has acquired 100% stake in Finixis SaaS for about 10 million euros. So we'll find out how that helps them. At 9 a.m., we'll be in conversation with Shirish Pardesi of Centrum to talk about some of the major trends in the FMCG sector. Is there a recovery in sight in 2025? At 9:20, Rahul Arora of Nirmal Bang Equities joins in. He's our market master of the day. At 9:30, we get chatting with the management of Muthoot Finance. Big concern about the MFI sector, but will it get better from the fourth quarter of FY25 onwards? Are we at the bottom here? That's what we'll ask Mr. George Alexander Muthoot. After that, we get chatting with Mr. Sampath of Keynes Technologies, one of the best performing stocks and sectors of the year, the EMS play. So what is the outlook for 2025? Is the order book still looking as robust? And, what are they seeing ahead on the horizons? That's what we discuss. At about 9:50, Alok Mishra of Microfinance Industry Network and Aishwarya Khandelwal of India Ratings joins in. We talk about some of the key big trends in the microfinance sector. And by the end of the show, in our special segment, Outlook 2025, we have Lata joining Sameer Arora today for a conversation that promises to be very, very interesting.
Time for a shop break, but we've got lots of stock-specific action to track today, and we'll get to it in just a bit in our special Top 10 segment. We're looking at Whirlpool, PG Electroplast, Symphony, Oberoi Realty, Greaves Cotton, Orient Pro Solutions. These stocks could be higher in today's trade. Reliance, Bharti Airtel, Vodafone Idea, SBI Cards are the stocks that are on our radar that could open in the red.
And finally, in some tragic news, veteran filmmaker Shyam Benegal, often regarded as one of the most influential filmmakers and indeed intellectuals of our time, passed away yesterday. The veteran filmmaker took his last breath in Mumbai's Wockhardt Hospital, where he was undergoing treatment for chronic kidney problems. Shyam Benegal was honored with the National Film Award for Best Feature Film in Hindi a record 7 times. He has received the V. Shantaram Lifetime Achievement Award in 2018. Through his career, Benegal received numerous accolades, including the Padma Shri, Padma Bhushan, the Dada Saheb Phalke Award, which is India's highest honor in cinema. Old-timers like me will, of course, remember so many of Shyam Benegal's films, starting from Ankur, Nishant, Manthan, and the more latest, of course, Well Done Abba, which kind of rings in his sense of humor and satire in that movie. And the positivism, the optimism, that you can make a difference in a bureaucracy-ridden world.
Welcome back. So, like we've been pointing out, there are markets around the region which are showing some green, but it's a little mixed right now. For us, the GIFT Nifty is actually down 40 points. So, let's see which way we go. But lots of stocks to track as always. And our team is standing by with the CNBC-TV18 list of top stocks for the morning. Abhishek, I'll start with you. There's a credit card data that's come out today. How does it look for SBI card?
Well, credit card data, take it with a pinch of salt, given the fact that in the previous month, October, we had the festive season of Diwali, and last year you had Diwali in the month of November. So there is an effect of, the base YOY and month on month as well. However, SBI card has lost a massive market share, which I'll adhere into. Industry-wise, the card issuances is up 11.7% YOY and about 0.3% month on month. The spends are up 5.5% YOY, and they have declined by 16% on a month-on-month basis. So average ticket size is down 5.7% YOY and about 16.5% month-on-month. For SBI card, the card issuances have grown by only 9.8% YOY when compared to industry average of 11.7%. However, month-on-month, their card issuances have grown by 1.2%, while industry has grown by 0.3% only. Spends, they are down 19.7% YOY and about 20.9% month-on-month. The average ticket size, that's down massively by 27% YOY and nearly 22% month-on-month. So in terms of cards, their market share is at 18.7% when compared to 18.5% month-on-month and about 19% on a YOY basis. However, the spends market share, that's down massively to 14.9% when compared to 19.5% that they had on a year-on-year basis and about 15.8% on a month-on-month basis. So losing the market share in spends, I've given a red tick on SBI card today. Back to you.
Thank you very much, Abhishek. That's extremely well put. The industry, you may see some month-on-month declines because of the festival season in the previous month, but SBI has done much worse than the industry. That's a very important point. And methinks, just a deviation, it was not a sensible idea to ward off, to hive off SBI cards from the main SBI. HDFC Bank is making money primarily because they've given free cards to the HDFC home loan guys. I mean, you already trusted them with whatever, 40 lakhs, 1 crore, give them a card as well. You must envelop it with the savings data and loan data that the bank has. Perhaps hiving it off was not the best of ideas. But anyway, that discussion for another day. Stocks and news. Upasna, you have a list.
Good morning. First up, let me start with PG Electroplast and Whirlpool. Both these stocks will remain in focus today as both these companies have signed a definitive agreement for contract manufacturing for select models of Whirlpool's branded semi-automatic washing machine. Now, under this agreement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. And mind you that the PG Electroplast is already an existing supplier of Whirlpool's branded air conditioners. Now, what the company has highlighted is both these companies, that is Whirlpool and PG Electroplast, will continue to evaluate the potential expansion opportunities further. Next up is Symphony. Even this stock will be in focus. Company has launched 17 new air cooler models, and what company has said that they have received overwhelming response from its trade partners. Company has received highest ever off-season advance collection for its new products, and most of the revenue from these new models will be recognized in March 2025 is what the company has indicated. Hence, both these stocks will remain on our radar, and I expect both of them to open in green today.
Thank you very much for that. Over to Vinny now for some more stocks in the news.
Good morning. Yes, so let's start with Oberoi Realty. That one is going to be in focus, expecting a positive move here after they've signed a development agreement for 81 acres of land. This is in Alibag, Maharashtra. Now, they plan to build and construct a luxury 5-star hotel or a resort in that 8.6-acre part of the land. And this is around a 328,000 square meter land in Raigad, which they're looking to develop. So an interesting move and is what we're expecting in terms of Oberoi Realty going forward as well. Greaves Cotton, keep an eye out on that one. After subsidiary Greaves Electric Mobility has filed for a DRHP. Now, obviously, they plan to raise around 1,000 crores through IPO fresh issue, and there's also an OFS. In the OFS, we'll be seeing Greaves Cotton, obviously one of the top shareholders of Greaves Electric Mobility, as well as one of these investment companies and investment groups, that's Abdul Latif Jameel Green Mobility, that will also be looking to sell some shares in this OFS for the Greaves Electric Mobility. So keep an eye out on this one. Other than that, we have Orient Pro that is also expected to open in the green. They've announced an expansion into the European markets with the acquisition of Phoenixes, and this is around a 10 million euro cash transaction, which is taking place for the 100% stake in the company. So keeping an eye out on all of these stocks today, expected to open in the green.
Okay, got that. Thanks very much, Vinny. In fact, we'll be chatting with the Orient Pro management to figure out how this acquisition helps them and what the overall business outlook is like. Ashish Rai will be with us in just a bit from now. But let's head across to Rima. Rima, now tell us this whole TRAI recommendation that, bring back the old pure voice packs. What does it mean?
So basically, remember, TRAI is a regulatory body and they can only make recommendations on tariffs. Tariffs are under forbearance, which means that telecom companies have the right to price their tariffs. There will not be any there can be a regulatory nudge, but there cannot be a regulatory diktat on how to price tariffs. Now, what TRAI recommended yesterday is that also introduced only voice and SMS packs. There are many people who don't want data, but because the packs are all bundled together, you get voice, SMS and data, it's forced on people who don't need it. And therefore, there is a need for only a voice and an SMS data pack. Now, telcos have two options, right? You have a current entry-level pack, which includes voice, data and SMS. You can say that I'm introducing another pack, another price point, which could be lower. Now, for instance, the entry-level pack is about 199 rupees, which includes also 2 GB of data, 28 days, etc., 100 SMSs, some voice calls, thrown in. Now, you can say that for only voice and SMS, no data, I'm excluding data, I will price this lower at 150 rupees. Yeah. Now, the risk for telcos is that some of the customers will downtrade and they will lose revenues on that front. But the other option that telecom companies have is that saying that the 199 pack, which is the entry-level pack, remains the same. I'm just excluding data from it.
Give you more voice minutes.
And this has only voice and SMS. And if you want data, then you need to upgrade to the higher value pack. So now the ball is in the telecom companies' court. This is clearly a nudge from the regulatory authorities to introduce more affordable packs. Don't force data on them. But I think the way the street is going to read it, at least for now, till pending clarity from the telecom companies, is that given that we're such a price conscious and there's always been price aggression, that maybe there is a risk that the telecom companies introduce a cheaper variant plan, and therefore there is that risk of downtrading, which could pressure the company's financials.
My point would be, bureaucrats in the TRAI don't have the commercial sense that a telecom company will have. Their own money is on the line. So if this was commercially viable, they would have thought of it before the bureaucrat.
But the bureaucrats are thinking of Janta ka bhala.
Yeah, that's and that can only be recommendatory. Yeah. So I don't know whether we should run away with the idea that this can be negative at all.
It may not be. Telecom companies have the right to say that, my entry-level plan now excludes data. It only includes voice and SMS. Take it, because anyway, everyone's already paying for that. That's the minimum amount. Yeah. And if you want data, then you upgrade. and that would be positive for, telecom companies. So it depends, how this plays out, but interesting development.
So recap now of all the stocks.
Okay, let's do a quick recap then. So stocks with positive news flow are Whirlpool, PG Electroplast, Symphony, Oberoi Realty, Greaves Cotton, Orient Pro Solutions. Stocks with negative news flow are the telecom companies, perhaps. We'll have to see how this plays out, and SBI Cards.
Okay, with that, let's go over to Manisha Gupta to get a roundup of all the commodity market action. Manisha, tell us, what should we be prepared?
Well, high volumes and very, very thin trading numbers coming in here. The markets also have, in the meanwhile, seen some strength come back in case of the crude oil prices. That is because the Trump is now threatening to reclaim Panama Canal, accusing it of excessive usage fees. Remember, 2% of global oil flows through Panama Canal. So various statements still coming in from the U.S. president-elect are keeping the markets edgy here. In the other news, we also are looking at some more pressure continuing for the metal prices. The strength in US dollar is putting pressure. But for the gold prices, we still are up by 27% in this year. This, by the way, is the best yearly gain since 2010 that we have seen for gold. Copper is still trading at a 3-month lows. Aluminum and zinc prices still continue to decline. The U.S. PC numbers coming in soft for the month of November are putting pressure. And then the lack of China fiscal support, demand concerns as we are stepping into 2025 also weighing on. So most of these metal prices, which did perform very strongly in the first half of 2024, haven't done that in the second half of this year. And we have washed away quite a bit of gains. But the markets will watch out on what the U.S. does before it heads for the big long weekend here. Very jittery is all I can say, as in the Asian markets right now.
Okay, thank you very much for that, Manisha Gupta. Jittery but thin trades. Most people away on holiday. So in a holiday thin trade, there is likely to be heightened speculative activity. We take a short break on that note, but when we come back, we are going to connect with Hemang Jani, who will take us through a lot of fundamental analysis of stocks.
Welcome back. Asian market is largely positive today. Hang Seng is up more than 1%. Kospi, though, is in the red. And in the entire emerging market basket this year, in 2024, the Korean market, the South Korean market, is the only one to report a negative, return. Kospi is down 8% in 2024, and it's the only Asian market to end 2024 in the red. There is some consumer sentiment data, and that's also fairly muted at the lowest level since October of 2008, which is basically the financial crisis. But Hemang Jani is now with us to talk about individual stocks. Hemang, first come in on the telecom stocks and this TRAI recommendation that introduced only an SMS and voice pack. How will the telecom companies respond to that? And would investors be worried that, we could be in for cheaper tariffs now?
Thanks for having me. So clearly, let's get a perspective on the total component of the non-data subscriber for Bharti, Vodafone and Jio. So Bharti accounts for about 15% of the revenue coming from the non-data subscribers. Vodafone is 20%, and Jio technically is classified as data subscriber only, but almost about 50 to 70 million of the Jio phone users are prone to some sort of a downgrading. Now it remains to be seen how exactly the telecom companies respond to this, and will there be a separate price point or offering for the non-data users? So to that extent, there is a possibility of some sort of a down trading, but ultimately it will entirely depend upon telecom companies. So maybe a bit of a negative reaction for the telecom companies, but I don't think there is a case for a substantial correction on this news.
Okay. Good morning, Hemang. Good to have you with us, especially when a lot of guests are not obliging. They're away on holiday. Thank you very much for joining us. Well, first up, I wanted to ask you, at the moment, are you a net buyer? Because the market has given you almost a 10% correction, Is this a good buy time, or do you think you will still wait?
Good morning, Lata. So yes, I think after almost disaster or Q2 and the fact that trends have not really reversed in a major way for many sectors, people are going into the earnings season with a lot of caution, particularly on the consumption side. Even the government capex does not seem to have revived in a big way. So I think people will look out for pockets where you can see a bit of a positive surprise. So, something like spirit companies, maybe some of the banks, auto, you can have a little bit of surprise come through from names like Mahindra. Also, one important aspect is in the microfinance, which actually surprised everybody big time negatively. There are indications that you could see even far bigger surprise because the stress, as far as the microfinance sector is concerned, is still not out of the way. So I think we will have to be far more stock specific, sector specific when you're approaching the market at this point.
Okay. Now, there is actually mixed data. We will have our colleague Sudarshan present the data. He has the Vahan registration numbers from December 1 to 24, and it looks like two-wheelers is really bad, still down 20% year on year. But at least personal vehicles are flat. They haven't fallen. And this is year on year. You can't even complain that people don't buy in December because it is seasonally adjusted data. We will have Sudarshan come and give us that data. But Hemang, there is some positive news we got from Symphony. They have said to the stock exchange that the advance money they have got for their new air coolers for the summer season, that is advance payments, is excellent. I mean, among some kind of a record. Is there any pocket in consumer durables or discretionaries that you would buy even in the current market?
So Lata, when we look at consumer discretionary space, I think spirit companies, our interactions with the management clearly suggest that both in terms of the high end or the premium product volume and on the margin side, things are very well placed. Also, I think, some of the, companies on the manufacturing side, like PG Electro, Dixon,
Yes.
Amber, those companies continue to do well. So I think these are the pockets that we would be looking to buy into.
This PG Electroplast, what a rally it's had. Just last week or 10 days back, they did a QIP. They raised 1,500 crore rupees. And the price point for that QIP was 690 to 699 rupees. And look at the stock price now, 950 rupees. And this QIP happened in the month of December itself, in the first half of December. 30% up move in the month of December. And this year, it's 300% higher. And today, of course, there's fresh news. The company has entered into contract manufacturing agreement with Whirlpool to manufacture certain models of washing machines. Hemang, would you go out and buy PG Electroplast at these levels and after this kind of a rally?
Rima, yes, the stock has done exceptionally well last 1 month or year to date, and clearly, I think in a scenario where many companies and sectors are struggling with growth, you have very fewer pockets, like PG Electro or maybe Dixon, Amber. These are the pockets which are showing you a lot of growth, and the fact that the companies have invested in the capex or raised money would mean that the trend will continue. So I do find that the run-up is, huge, and the valuations are not cheap by any stretch of imagination. But because of the lack of availability of better options, in the value or comfort zone, people would want to have some part of their portfolio in these names. So from that perspective, I do like PG Electro. I think it still offers another 25-30% kind of an uptick even from current levels.
Hemang, request you to stay on, inviting the management of Orient Pro Solutions. Now, the company has announced its expansion into the European market with the acquisition of Fenixys for 10 million euros. To discuss this, we have Ashish Rai, Global CEO at Orient Pro Solutions, joining in. Ashish, thank you for joining in. Santa has come with an acquisition for you. The gift he's bought is Fenixys. So tell us a little bit more about the company that you acquired, the rationale behind it, and what are the margins and the kind of growth rate this company has enjoyed in the past, and how can you scale it up?
Yeah, hi, good morning, first of all. Thanks for having me. That was a nice comment. Look, Fenixys, we've been extremely impressed with and very, very excited. We've been partnering with Fenixys for some time. It's a highly specialized, capital markets consulting firm. partners with some of the largest banks in Europe and in Middle East and Africa in terms of their, the trading book transformations, right? So I think it was sort of very, very strategic to us. One, as you may know, we've got a lot of tier one offerings, soft products in the enterprise application space around the banking book. We are pretty much the leaders in Asia on a lot of these solutions, and this sort of helps us expand those offerings out into the European market, both from a services capability standpoint, as well as a go-to-market standpoint, as well as the relationship with the largest banks. Plus, it also allows us to build out a global capability on the capital market side, where, a lot of it is centered around our partnership with Murex. Fenixys also happens to be a partner, and we are very strong in Asia and Middle East, and Fenix is very strong in Europe and the Middle East, right? So we sort of bring that together into a global capital markets capability, right?
Sure.
On your question around,
Yeah, two questions. Margins of Fenixys, will it be EPS accretive? And two, what is the current contribution of Europe and how much would it go up to?
So Europe for us right now is near zero, right? So we had a stated strategic plan at the beginning of the year to expand into Europe this year. I think with this acquisition, we really strengthened that overall. So next year, it should be a pretty material percentage. I think we should be, for the next 2 years, nudging to double digits. Margins, yes, it would be EPS accretive. Fenixys is a profitable firm. We don't really infuse any capital into the business right now. Over time, we believe over the next 18 months, we will be able to drive the Fenixys business to our enterprise margin levels, right, which is at 20% plus EBITDA levels.
That was exactly what I was going to ask you, Ashish. This is a fairly competitive place. We just heard from NSE. Their NSE IT company has been spun off into New Summit, and they offer a lot of capital market products. NASDAQ has its own software unit, which provides capital market products. So Fenixys margins would be under pressure because of competition. Does it come up to Aurionpro's level at all in terms of margins?
That's a great question, Lata. I think the way to look at it is this. One is Fenixys standalone as a pure services player existing out there. Second is Aurionpro with its enterprise products, with its IP-led offerings, and then extending the Fenixys services capability to Aurionpro's stack as well. Right, so most of the operating leverage for us comes from expansion on the product side. I think on the services side as well, we believe this is a highly specialized offering, right? Together with our capabilities offshore, you can create large global, dual shore, multi-shore capabilities for the large global banks. So I think even on the services side, we feel very good about being able to get to the services level, because this is not commoditized services, this is not software development, this is around services around very specialized IP. I think we can maintain margins there. And then as we extend the Aurionpro's product stack and build out our services capability in Europe, I believe that will really bring us up both growth levels as well as margin levels to our enterprise levels.
So Ashish, just to complete this point, margins for Fenixys will come up to 20% in how many quarters?
I think over the next 18 months, we should be able to, get the growth numbers up to Aurionpro kind of levels, which is 30% odd. And we should be able to get the margins up to the enterprise levels.
Okay.
A word on your
just a further question on an outlook as well. You earlier have told us that for this year, FY25, I think the revenue guidance is 30 to 35%, EBITDA guidance is 20 to 22%. So I want a broader view now, and you're very bullish on your US business. As we go forward, what have you started hearing from clients? Because we'll have the new dispensation come in, Donald Trump as well. And what would be your mix between onshore and offsite right now? And are you prepared if there is a sort of, anything on immigration, on H-1B visas? What are you looking out for, considering that you're quite optimistic on the US outlook?
Yeah, so look, the 30 to 35% guidance for the year, we are very firm on. We will land in that band, probably slightly upward bias. The US will climb up to almost double-digit percentage level on the overall business. So I think that you're totally right. We are very bullish on the growth that we're seeing in the US. We are not that affected by things like immigration policies and all, because we are a products vendor. In US, we exist through our presence on the transit payment side. We are a technology provider to closed loop to open loop transformations happening across US. And second is on the on the product side, where we will provide payments technology, banking technology to certain partners, right? So I think we're not very resource intensive. I think, overall, we have a product stack that's now more or less proven to be very, very strong and top tier in the world. We are leaders in many of those spaces in Asia. So it's a question of organically expanding into more markets, whether it's Europe or US, and proving that same sort of leadership in those markets, right? We feel, and these are all, products which are proven with large banks, across Asia, across US now, right? So we feel very good about being able to expand. I don't think we'll be affected by things like immigration policies and all, to the extent that, it will, let's say, impact a services vendor. But yes, I mean, we will navigate things as they come along. We feel very good about US.
All right. It's good to hear businessmen who feel good about the business. Thank you very much, Ashish. Precisely the kind of good news we want to hear as we coast into the new year. And here's wishing you as well a very happy 2025.
Happy holidays. Thank you.
Well, that's the word from Orient Pro. We have to take a quick break, but we're going to be back. We will have our technical experts joining us to give us their technical strategies as well. So Darshan and Mitesh will be back.
All right, welcome back. So we've given you lots of fundamental cues to chew upon. Let's get down to technicals then. We have Mitesh Thakkar as well as Sudarshan Sakhani joining in. Gentlemen, morning. So, we were joking and debating how this is a false rally or a Santa rally. But whatever it is, I think traders will just heave a sigh of relief. At least we had some pullback on the Nifty yesterday. So let me ask you, how much credence and weightage are you giving to yesterday's pullback, and how would you trade today? Mitesh, good morning.
Good morning, Subi. So I think, one, we were very oversold day before yesterday and we had a pullback. Now, I don't see any signs of a reversal or an uptrend or up move starting. So my belief is that maybe in the short term, the decline is arrested and therefore the market might chop around broadly, between 23,600 to about 23,800, 850 zones. I think that should be 250 point kind of a range for the next few days. I still believe that there is a significantly higher chance of us eventually breaking down. So the idea is that you try to buy near the range, keep a very tight stop loss, try to book profits near the upper end of the range, which is around 23,800, 820 levels, even explore shorting over there.
Okay.
Sorry, go ahead.
Sudarshan, good morning. What would you do? Short this rally?
Hey, good morning. And no, Lata, yesterday I said that we could be heading for a Santa Claus rally. Could be. And yesterday was a good day. Our levels of 24,600 were not touched. So there was a buying opportunity intraday also. I was saying that buying opportunity continues to exist. So see, Lata, suppose a trend is starting again on the upside, it won't happen in a day. It will take its own time. So far as our levels are protected, the levels below which we say it's not working, that's 23,600 for the time being. So far as that is protected, I would be long, look to buy on dips and let the market takes its own rhythm. I think in a few days we'll see higher levels.
Let's get to the top stock ideas then for the day, Sudarshan.
Sure. Glenmark is a buying opportunity, stop under 1535. And from the similar sector, Apollo Hospitals, not exactly similar, roughly. That's a buy with a stop under 7180. We discussed this yesterday also, that pharma does its own thing. The market is down. Suddenly pharma stocks have good news and they keep on rallying. That phase continues. So Glenmark, Apollo Hospital, my only intraday short is Polycab, where something is going on. It's an intraday short with a stop above 70. I'm sorry, I'm missing the stop. Okay. So we'll just say it's an intraday short. And Manappuram is a buy. Yes, Polycab. Okay. And Manappuram is my third buying idea with a stop under 183. So there are primarily we should focus on the buys, Glenmark, Apollo Hospital and Manappuram.
Okay, got it, Sudarshan. So you're still more inclined towards some buying ideas rather than selling. But Mitesh was telling us that he's looking to short the index at around 23,800. Mitesh, let's come down to stocks as well. Selling or buying or a mix of both?
I have a mix of both, Surabhi. So I have a sell on MCX if it breaks 6,300. Take a stop at 63.70. Look for targets of 61.50. Hoodco is a sell on a mild bounce back around 238, 240 range. Sell with a stop at 245 half. Look for targets of 225. And on the buying side is Dabur, which I would recommend buying with a stop at 499 for targets of 528. And ITC, if it starts getting past yesterday's high of 478, buy the 5-6 point kind of a stop and look for a target of 492.
Okay. Thank you very much for that, gentlemen. We are going to come back to you with more trading ideas or 4 more trading ideas as we get closer to trade. For the moment, it's a break. We still have Himang Jani with us. We're going to come back with the pre-opening trades, and we will also be joined by Shirish Pardeshi of Centrum Broking. He's going to talk to us about the key trends in the FMCG space. Welcome back. This is Open Exchange coming to you live from the CNBC-TV18 Motilal Oswal studio. And as promised, we have Shirish Pardeshi with us to shed spotlight on the FMCG space. He's from Centrum, of course. Centrum is positive on the FMCG space. Shirish, good morning and thank you very much indeed for joining us. I'll just take a minute to speak about the pre-opening trades. The pre-opening rates are opening absolutely randomly. The Nifty is in the red and the sensex in the green. So we'll come back to it in just a bit. Shirish, happy 2025 to you. Thank you for joining us. Why are you all positive on FMCG? We heard every one of them almost, grumbling away. We had data from Godrej. We had Marico as well. Not very happy with the kind of sales data they had in earlier Q3. What makes you positive?
Thank you, Lata, having me on the show. There are 3 trends which at this point of time, if you look at on the ground, starting from June, July onwards, the syndicated data was showing that the rural recovery was on the card. That is what is visible. Please keep in mind that about 52% of volume comes from rural markets, and these all are firing well. Second, barring apart the weather conditions, people might have become a little short-term negative because the season, the winter is not the way it was panned out. But if you look at the agriculture data, whether it is the Kharif crop output or Rabi, I think my view is that the rural will still continue to do better. Now, the issue is that when we look at the urban consumption is inching lower than the expectation. There are 2 reasons there. When you look at the MFI data, the microfinance data collection, or you look at the earning growth, which has been tapering down, no wonder the leverage of the urban has gone up, and these consumers are having a pinch. The third point which is there, which is important, is that how these companies are managing the channel conflict. If you look at the QS, the quick commerce segment is firing well, the modern trade is doing well, while the general trade, the traditional trade is struggling. Now, these channel conflicts are actually telling us the primary billing or the company billing is happening at the lower side, while the secondaries are having better. Look, the Indian consumers are always been value for money, and they will hunt and bargain whichever channel which is giving them the benefit of price.
Okay.
No, but Mr. Pardeshi, the point I think for the market is that do you want to be in stocks which are going to give you low single digit to maybe sort of mid single digit kind of growth, which is what FMCG has been doing, considering the valuations have been very, very rich historically. You do have a positive view on, I think, companies like Colgate and maybe, I think, even an ad on HUL. So tell us the buy thesis over there. What do you see ahead? What kind of volume growth in 2025? I mean, FY26, let's say.
See, if you look at last 3 to 4 quarters, this volume growth was being challenged. However, Colgate has proven that whatever inputs in terms of marketing, on-ground activities, distribution, sampling, these all are reflecting into the very strong volume growth. Now, the question is that the street is not giving the benefit, saying that the volume growth is low to high single digit and the value growth is missing. But you have to also keep in mind that the inflation is inching up and there could be a price which is there. Historically, my experience says that 2/3 volume, 1/3 price is the right summation, which is better for the consumer companies. However, at this point of time, the price inflation, which has just started inching up, and if you look at our channel check says that most of the companies has implemented around 3-4% price increases. So effect of this will happen. Now the question is that if you want me to answer the next year, what kind of volume growth we expect? You can expect a 10-year or 20 years average, which is in the range of about 4 to 5%.
Okay, just want to interrupt the stock discussion for a minute. The markets, stock markets still are not giving us much of a trend. The Nifty is kind of blinking flat line to red and the sensex is up 0.25%. So I won't come to shares since things are so undecided, but what's clearly traded, the traded rate on the rupee is clearly indicating continued weakness. It's now gone to 85.13.14. We closed yesterday at about 11.12, 85.11.12. So the first trades have been for a more expensive dollar. And that is perhaps to be expected because we did see the dollar index move back up over the 108 mark. So this shouldn't come as too much of a surprise. Shirish, are your buys only HUL and Colgate?
No, our buys are Britannia and Emami. The reason is that Emami, if you look at the 10-year average or even 5-year average, the 1-year forward was in the range of about 30-32, while Emami is trading at maybe 23-24 times. So there is a value which is there. However, the interest is that if the season is expected to pan out the way next 15 days, if the temperature falls, I think Emami should do well. What is more important is that all the issues around the company's pledge and other things which are sorted out. And I think it's one of the better company which has been delivering a very strong high operating margins. So in that context, there is a value pick which I would say. Similarly, when you look at Britannia also, which is trading its lower than 5 years and 10 years average multiple. However, what is more important at this point of time, the company in the previous con call has already said that there is price increases or the grammage reduction which will happen. We'll have to wait and watch. However, these are the things which are in the short term. And looking at the multiple, it looks attractive at this price.
Okay. What about ITC? The stock hasn't done too much despite the news about the hotel demerger. Is there any value in ITC at current levels or any arbitrage?
I would say that let's wait because we are in that phase. Another 15-20 days, we will have budget blooms and things will start inching up. However, on ground, what is important is that if the thesis is that the rural recovery is on the card, I think I would expect the cigarette business for ITC should do well. However, we have to also keep in mind that there is an incremental competition which is gearing up in the cigarette segment. So one, there are two short-term challenges. One is the budget, what will happen and what are the kind of duty changes and the excise changes which will happen. And second, I think the industry has not taken a very strong price increases and there's no precedence unless the excise has gone up and the industry has taken standalone price increases. So I think these are the two interlinked issues which will get a clarity maybe another a month or so.
Okay. Thanks a lot for that, Shirish. Pleasure speaking with you and hope you have a very good 2025.
Thank you.
Well, that's the word coming in on the FMCG space from Centrum. A buy on Emami is what they're rooting for. Let's just get back to the markets for a jiffy. The sensex is still holding a bit in the green. Sudarshan, any buys now after the first few minutes of pre-open trading?
Well, my pick would be to buy Manappuram with a stop under 183. Broadly, financials should be a little more cheerful today.
Okay, financials more cheerful. Mitesh, anything you've noticed, any buys in addition to the list you gave us?
I'll go with a buy on Dabur, I think. Targets of 528, 530 in the short.
Okay. It's very, very quiet, by the way, on the pre-open screens as not much moving. Adani Enterprises, BEL, Adani Ports, some of these stocks are up and about. That's pretty much it. And
if I may interrupt for a minute, since the rupee is now gone to 85.15, you know, the first 5 minutes of trade over there and the dollar has gotten that much more expensive. Sudarshan, is there anything in the IT space that you would buy? A weak rupee. Okay, I think we'll come to Sudarshan in a minute. Mitesh, anything in the IT space that would count as a buy?
See, IT, in fact, Lata was doing very well a couple of days back. I think it's just got corrective, towards last weekend. So I think I'm waiting for this pullback correction to play out and then buy into IT stocks.
okay, all right. Mitesh, thanks very much. Let's see how the market opens out. We'll come back to you during the course of the day to take stock. Let's look at some of the stocks that are in news. Vinny is looking at Biocon today. There's a drug approval that the company has received, I think, in the EU. Very morning. Tell us more.
Good morning. So what we're seeing coming in for Biocon, positive news. One, the company and its European partner have actually received this DCP. What is DCP? It's a decentralized procedure approval. And this is in the European markets for that complex formulation, which is liraglutide. Now, the company has spoken about this as well. This is a big opportunity, the GLP-1 opportunity that we talk for most of the companies. And Biocon 2 itself has highlighted this in Q2 about this opportunity. Now, finally, they've gotten this approval for the European Union market. So keeping an eye on this one. What is this? Now, this is an approval for the generic version of Victoza, which is a treatment, which is a drug used for treatment of type 2 diabetes. And this is also used in weight management, weight loss as well, which everyone has been using it for some time. So that is a big market that is shaping up across the globe. And that is why a big positive for Biocon. They said that this is a big opportunity for them in the second half of the year. They were expecting these launches to take place from now on till FY26 as a big opportunity. And that is what is happening right now with the liraglutide approval coming in, at least in the European markets. They are already in the pipeline in the US markets. So let's wait out for that as well.
Okay, thank you very much for that, Vinny. So a diabetes control generic version and a diet control generic version, both of which hopefully will make money for Biocon. They've got initial approvals. Now, here's some data which is a little disturbing and telling us that the urban consumption slowdown has not gone away. Sudarshan is here. He has compiled the latest registration data from the Vahan portal. Sudarshan, tell us, what did you pick up?
Morning, Lata. So we have tried to see if there is an improvement in Vahan registration data after we covered last week. The answer is no. Yes, there is a minor pickup. Last week when we had covered, after 2 weeks, total registration was down nearly 25%. Now it's down 20%. And which segment is dragging the most? It remains the two-wheeler segment. So overall registration is down 19%. Even two-wheeler segment registration is down 20%. Two segments that are doing much better than other segments, and those segments are electric vehicle and CNG. Electric vehicle registration has increased 9% and CNG segment also has increased 8%. For passenger vehicles, last week for the 2 weeks, registration was down 3%. Now it has turned flat, so there is a minor positive here also. So overall registrations from December 1 to 24 in 2024 is at 13.87 lakh units against total registration in 2023, it was 16.37 lakh units. So in the last 1 week, there is a minor pickup, but concerns remain.
Okay, minor pickup, but year on year, we are still not doing as well as December of 2023 is what Sudarshan is telling us. That's a bit worrisome. But perhaps if there is a pickup in the third week, it'll be better off in the fourth week. What's not looking good is the credit card data that we've got from SBI cards. Abhishek had explained to us earlier. He's here to remind us of the SBI card numbers vis-a-vis industry credit card numbers. Tell us, Abhishek.
Well, Lata, to begin with, last year in November, the Diwali was there, and in this year, October, Diwali was there. So, YOY and month on month may not look a comparable parameter for growth. However, the SBI card has lost market share, which is a key worry. So, industry-wide, the card issuances is up 11.7% YOY and about 0.3% month on month. Spends are up 5.5% YOY and down about 16% month on month. Average ticket size is down 5.7% YOY and about 16.5% month on month. The The card issuances at SBI Card, that's crossed the 2 crore mark, now at grown at 9.8% YOY and 1.2% month-on-month. Spends are down 19.7% on a YOY basis and about 20.9% month-on-month. So average ticket size is down nearly 27% YOY and about 22% month-on-month. The SBI Card market share with respect to card issuances has been at 18.7% when compared to 19% YOY and about 18.5% on a month-on-month basis. So month-on-month card issuances, market share has increased. However, the spends market share has declined massively to 14.9% when compared to 19.5% YOY and about 15.8% on a month-on-month basis. Back to you.
All right. Yes, Abhishek, thanks very much. SBI Card has found itself in slightly troubled waters, lower growth. Not new, it's been happening for the past couple of months now. Anyway, let's quickly take stock of Asia as well as where we stand as we're gearing up for market open. Asia, remember, a lot of the markets they've got very thin trade. So Hong Kong, for instance, is showing you a near 1.2% gain. But guess what? The market's about to shut down. I think 9:30 IST is when Hong Kong is already off for its Christmas holiday. Likewise, Singapore. Australia is already shut for the day. So the volumes are thin, but the color has been green across most of the regional markets. That brings us to the Nifty here. Again, the starting would be about 15 points higher. Remember, the challenge for the market was the 200 DMA. Intraday, there was an attempt yesterday to cross above that mark, but it wasn't quite successful. Let's see if the fact that most of the FPIs are away, and maybe if we just maybe we don't get the bulk of that selling, whether we try and take out the 200 DMA at least today. So as we're gearing up for it, things are very quiet. There are no major sectoral moves or trends. It'll be down to individual stocks and, of course, what traders latch on to. So here we go. The bell has gone in. Starting with some moves on Adani Enterprises, about 1% higher. There is BEL, NTPC, Coal India. Some of the PSUs are starting positive. There's a Nestle, which is up and about. We were just discussing FMCG stocks with the analyst earlier at Centrum. ICICI Bank, SBI, very minor green ticks. But the Nifty is now blinking red as well. So let's see what's happening on the other end. Power Grid, Cipla, Sun Pharma, Apollo Hospitals. These are stocks on the way down. There are some of the metal names which were shining bright yesterday. There's some profit taking there. JSW Steel, Tata Steel. These are stocks on the lower side. IT actually is not really responding too much to the rupees moves or to the Nasdaq's gain. If you see, Infosys is up about 0.3%. TCS is actually managing a 0.3% gain now. Wipro is down. Tech Mahindra is absolutely flat for the time being. I'll hand it over with Bharti Airtel. Remember all this chatter around TRAI's recommendation. Right now, the stocks seem to be taking it in its stride. No concerns there. About 0.6% up on Bharti for now. Extremely quiet. 2-3 points here and there around the flat line.
I've never seen a quieter market. I mean, there's nothing that has moved more than 0.5%, red or green.
Yeah. So just a word on Bharti Airtel. Yesterday, during market hours, the TRAI released the October subscriber data. Now, the industry has been losing subscribers since July when the tariff hike, or 15 to 20% tariff hike was effected. So from July to even the month of October, the industry has lost subscribers on an aggregate basis, but the pace of subscriber addition has slowed down. But in the month of October, Bharti added subscribers while Jio and Vodafone Idea lost subscribers. So the thing is, this came out during market hours, but on the sidelines, it's it's a positive, right? It's incrementally positive. That in the month of October, when the industry lost, Bharti had managed to add about 2 million subscribers.
I mean, even a couple of days before that, they paid back their spectrum debt to the government. So there has been a string of positive news. Okay, now we are seeing more than 1% moves in one odd quarters. One of them is Sedulity, the healthcare technology company. That one's up about 3.84%. IGL is up about 1.7%. They've, I think, taken some price hikes, and that may be helping them. But the number of stocks in the red are outweighing the number of greens at this point in time. No, it's still the other way around. Advances are higher. But the mid-caps have moved into the red, which is what gave me the fear that maybe even in terms of advanced declines, it would be red. Mid-caps just marginally in the red, but still in the red for the record. The Nifty is blinking red and green. But to be fair, we shouldn't draw any trends because just about everything is moving in very, very narrow range. The market is crying out It's holiday time, it's party time, and we don't want to concentrate on work. Well, Tata Motors now moving into the green.
Tata Investments. Remember, there's a money control report that Tata Capital is moving closer to an IPO. Look at what's happening on Tata Investments this morning. That's Motors. The other one, Tata Investments is up almost 5-6%.
Okay, it's this PG Electroplast, the stock that we were talking about earlier. So Hormus has just shared. Look at the return since 2021. In 2021, the stock price was up 470%. In 2022, 40%. In 2023, 111%. And this year, it's up more than 100%. So it's 4 solid years on the trot for PG Electroplast. On Sagility, there is a JP Morgan note where they've initiated coverage with an overweight rating, and their target price has been set at 54 rupees. And there's also Greaves Cotton, which has been pushing higher because its subsidiary, its EV two-wheeler subsidiary, the manufacturer of the Ampere brand of e-scooters, has filed a DRHP. They're looking to raise 1,000 crore rupees via the IPO. And this 1,000 crore rupees that the IPO is looking to raise, the subsidiary, there is a fresh issue, and there's also an offer for sale where Greaves Cotton, the parent company, will be selling some shares. So it's monetization for Greaves Cotton, the company. HG Infra, there is some news. The stock is up. MTNL, where they've offered voluntary retirement, VRS, for all employees above the age of 45 rupees, is higher. MobiKwik continues to run this week, up 11%. So it's very, very strong on MobiKwik. Ola Electric in the green too. On the way down, Vedanta has gone ex-dividend by 8.5 rupees per share. That explains the red tick on Vedanta. Zomato, Easy Trip, NMDC Sale are some of the losers. But let's welcome Rahul Arora, CEO of Nirmal Bang Equities. He's with us in the show. Hi.
Morning.
Feels like old times. Feels like he's here to anchor.
Yeah, no, I was reading Lata saying that it's Christmas time. I was like, what are we doing here?
And then we all wishing each other happy holidays. That's the part that I really don't get.
The boys have run away. Why don't you step in as an anchor?
Well, I can try. It's been years, but...
No, you better answer questions rather than ask them, Rahul. Well, first up, we have seen the markets off 10% from the highs, or nearly that, from the 26,200 highs. Are you in a stock picking mode at this point in time?
So first off, morning, and thank you for having me, Lata. I think one thing that was clear, Lata, at the highest point of this rally, which was somewhere around 26,500, 27,000, that the market was very overheated. I think if we looked at most of the stocks under our coverage, they were trading anywhere between 1.5 to 2.5 standard deviation over 3 and 5 year mean. So I think nobody would have questioned going into the result season, that is the last result season, that the market was overheated. Yeah. Add to that, you had one of the worst result seasons in recent memory, where at least at our brokerage house, 80% of the stocks either were held on estimates or downgraded. So you just had about 20% going in. And then, of course, subsequently, the shocker of a GDP number that sort of came out. So I think, obviously, sentiment has not been the best concluding this year. I think the next 40-45 days will be very important. We kickstart an earnings season in a couple of weeks. We have a new president in the United States, and we've recently put out a report on, what tariff implications could mean for global trade. And then, we have the union budget on the 1st of February, and then, of course, the RBI policy. So I think the next 45 days or so will be very crucial for the market. It's going to be very news heavy. But I think if I was to look at 2025 in totality, Lata, I think 24,000 will be a bit of a pivot point for the market. Plus minus 10% is how we're probably going to, spend the year. I think the recent high of about 26.5, 27,000 will be the peak for next year. I don't see the Nifty falling more than, say 21, 22,000. So it's going to be a broad range. But as you rightly pointed out, Lata, that doesn't mean stock picking opportunities don't arise. Even right now, there are enough and more opportunities that are being thrown up. But I think as we enter the next year, we should have slightly tempered expectations, because let's not forget the last 5 years have seen the Nifty go from 7,500 to 27,500. So I think to some level, having some measured expectations is not a bad way to enter 2025.
And what are the themes that will dominate the narrative next year?
So I think this is probably a consensus call that you've heard, Rima, but I think the biggest overweight is BFSI. I think, unfortunately, the elephant hasn't moved. I think FY26 is going to be a relatively softish year, because I was looking at, we've just put out a very detailed thematic on deposit growth and looked at how it's panned out from independence and when credit and deposit growth, kind of converges, and it's kind of converged right now. So FY26 may be a bit of a challenging year. An odd ICICI bank may outperform, an odd federal bank may outperform, but by and large, we're probably looking at 10 to 13% kind of NII and PAT growth for most banks this year. But I think as the year wears on and you start factoring in FY27 earnings, most banks are trading between 1.5 to 2.5 times price to book. That's nowhere close to where they have traded at their peaks, where they were trading between 2.5 to 3.5 and some banks even 4. I think if you get into a situation where you're looking at 15% plus kind of operating profit growth, BFSI will come back sort of to lead. The one sector I would completely avoid would be consumer staples, I think, at this point in time. So I think, any money that you have towards consumer staples can be moved here. And I think that the joker in the pack, as I was alluding to Lata in my first answer, could be IT services. I know it's had a good run, but I think if the US, the one call everyone in the world has got wrong for the last 2 years is the US recession. People have been writing about it, and not just sell side, buy side consulting firms, BCG, McKinsey. I mean, you pick up any, pretty much everyone's got it wrong. And I think the resilience of the US economy has helped. I think, and the last probably place, I think, so BFSI, IT, and I think consumer discretionary. I think these will still be the three themes to play out, and probably go underweight on consumer staples. That would probably be my broad positioning. And I think because government capex is going to be in the center of everything as we sort of approach the budget, I still think manufacturing and capital goods related sectors could do well, albeit valuations are not really cheap. But I think at least from a growth perspective, that sector could hold out.
So, Rahul, the thing is, for large cap BFSI and for IT to do well, these foreigners, they have to stop selling 90,000, 30,000, 40,000 crores worth of Indian equity on a monthly basis. And that goes back to the other point that you're making, this extreme strength in the US economy and the fact that this great buy home, buy go home, buy America trade, that's been the hallmark of the end of 2024. But what do you hear in terms of the chatter when you talk to your sort of circle around you? In terms of the extent of this FPI selling, can we hope for it to reduce at least somewhat?
No, I think some clarity may emerge, Surbi. And I think, when we had done Editors Roundtable a few weeks back, I had said that, the only economy that I see India competing for capital with in 2025 is the United States. I think on a relative basis, the fact that China still feels the need to stimulate its economy, and see, a lot of capacities have moved to India on the manufacturing side. I don't think we're living under any delusion that China plus one was going to pay out in a magnanimously big way and everyone's going to move manufacturing here. It's played out in a limited way. You've seen that in durables, you've seen that in electricals. I mean, someone like a Vivo announcing such a big deal with Dixon just about a week, 10 days back. So that process is on, I think. You are competing on a manufacturing level with something like a Vietnam, which is allowing 10-year tax holidays. That is something that India hasn't gone down the road and done yet. But I think from a straight FII perspective, you're probably competing with the US. On an FDI perspective, maybe Vietnam can be added. But my sense is, Survi, I think if, you have relative stability in the US markets from here on, I think the fact that Trump has come back, and I think, if you go back in history and as far back as you want, typically a democratic president has always coincided with global conflict. It's quite interesting. And a Republican president has actually coincided with stock markets doing well, partly because, most of the banks on Wall Street even today, are pro-Republican and are Jews. And I think, that's why they particularly take a stand on Israel as well. So I think it's going to be a pro-market government. And I think if that is the case, I think even if India manages to grow at 6%, at some stage, I think it is just a pro-Trump trade that's taking it there. Sorry for that tongue twister. But I think that's probably what it is. Obviously, the rupee has also seen a resultant impact of that. But I'll go back to a very small anecdote and I'll conclude my answer with this, Surbi. I think, in 2008, post-Lehman, I remember that year, FIs had pulled out about $20 billion from Korea, and the Kospi was still up 10%. And we used to ask ourselves, when will India reach that level where FIs would sell and the markets would still be positive? Given the selling numbers that you've seen, if we didn't have a 70 lakh crore asset management industry in India, the Nifty would probably be at 15,000 or even lower. So I think there is that absorption part. Of course, the other thing that's hurt our markets from an absolute standpoint is that a lot of IPOs have come through. So there has been some liquidity that's moved from the secondary market to the primary market. There have been some very big ticket IPOs. So that's also put some sort of a cap. But I think all of this will find its, the water will find its level. And I would not be surprised at some stage if we made a move towards the previous heights.
Rahul, stocks. You have BFSI and you have consumer discretionaries and IT. Which ones in these three sectors?
Okay, so let me try and make a model portfolio for you. I think if you look at banks, I think in the large caps, we'd probably stick with SBI and HDFC Bank. I think those would
not
be...
ICICI.
ICICI Bank is a consensus call, Lata, and I think it's trading at 3 times price to book. So I think on a relative basis, the delta...
HDFC Bank.
I think, is probably where it's at. I think you could look at an AU and a Federal, I think, in the mid caps. I think I think AU will probably grow at about 25% plus. Their cost to income ratio is going to drop down dramatically, which is going to aid profitability. So that's on BFSI. I think we can add ICICI approved life insurance to that. I think that would probably be. And one stock that you probably don't discuss very often, Lata, would be HUDCO, Housing Urban Development Corporation. That's sort of on the BFSI side. On the consumer discretionary side, since we're talking Christmas, let's start with an alcohol stock, United Spirits. We love that name. I think there have been a lot of regulatory changes in Karnataka, a lot of route to market changes, which could potentially give us an upside risk to our numbers by about 15%. So I think UNSP could be one, Chalet Hotels could be another, and Westlife could be a third. I think if you're playing the consumer discretionary basket, and like I was talking about manufacturing a little earlier, I think we'd play defense through some names like, say, Hindustan Aeronautics and BEML. I think those are some of the names that sort of come to mind immediately. Apart from that, I think it's very stock specific, Lata. I think we'd probably stick with LTIM and Coforge. I think Coforge will still give you about a 20% growth in the next financial year. I think there are still some levers. In fact, we recently met the management and upgraded our numbers. So I think, and I think if you want to go down the value chain, Rima, I think Birlasoft could be another one. I think it's been a bit challenging, but I'm not sure how many of these names are actively discussed on the channel. But these are, you need to find new ideas to give people all the time. But I think those are some of the names that we would look at in IT. Coforge would be the top bet, followed by LTIM and then Birlasoft.
Coforge has given a fantastic return of 45% CAGR over the last 5 years.
Let me put it into perspective, Rima. When we went into the lockdown, Persistent went in at 400 and came out at 3,600. So it was a 9-bagger in 2 years. So past performance...
Persistent's 5 years CAGR is 80%.
Exactly. So I think if you are let me give you one of the best examples that I love talking about is Dixon Technologies. I think if you look back over the last 10 years, the company has grown its sales, operating profit and PAT compounded by 35 to 40%. At a 35-40% return on capital employed and a nearly 4% EBITDA margin, and look at what's happened to the stock. I think if you're able to give those growths, I often call Dixon the Nvidia of India because, the way it compounds, the valuations don't look out of whack when your EPS is growing at that level. So, there are opportunities.
So there are opportunities. So let's end with the consumer because, that's a sector that historically you've always looked at so closely. And I know that you said that staples are not a place that you'll venture in. And I think the reasons are very obvious. When 3-4% kind of growth, does the market really want to go there? But at the same time, India is consuming in very different ways. I mean, the hotel stocks, the spends over there, travel, tourism, the discretionary part of it. Any stock on consumption which kind of tries, or maybe a Zomato, Swiggy, I don't know, anything that tries to capture where the money is being spent because it's being spent. Look at all around us.
So, Survi, at your CNBC event just a few weeks back, you all hosted the Swiggy CEO on the day of his listing. And I remember the sensex was down 1,500 points that day, but Swiggy was up 20%. It was remarkable that a company that was making 2,500 crore losses was having a 20% up move on a day when the sensex was down. I think a lot of the trade has moved to aggregators. You've seen Zomato move from 40 to whatever it is today. You've seen that happen in policy Bazaar as well. But I think, Survi, the way I would look at consumption today is, as I was talking about the Nifty, look at 5% volume growth as the mean. At bad times, this will drop to 2 to 3%, maybe even 1%. And at good times, about 7-8%. You combine a little bit of pricing and premiumization and you get about a 10-11% kind of growth. Now, at that, do you want to be paying 45-50 times valuation is my only limited point. And I would not be comfortable doing that very clearly. I think the only FMCG consumer staples names I would probably look at is where there is a food component to it. I think that could be an interesting one. So maybe something like a Britannia, Tata Consumer and a Nestle. I think those could be interesting names to look at, but predominantly hardcore consumer staples names like, say, a Lever or a Godrej. And you've seen the commentary around Godrej. I mean, it was a shocker. I think just those I would probably still want to, stay away from. And, as I was talking to Lata earlier, I've already listed some of the consumer discretionary names that we like, but Swiggy looks like an interesting one. I know one of my competitors has put out a note with a 700, 750 price target.
Yeah.
Disclaimer,
Two of them actually. I think there are two foreign brokers, but not worth of 700. Yeah.
So
JP and Sales.
Yeah, and I think a lot of it is quick commerce related, and I think that looks like a very, very interesting space. I think the one thing that's changed for a lot of these companies is when you go back to when these companies started listing, and I remember doing a show with Lata at that point, I think in the peak of, when these new gen companies were listing, terms like price to sales, client addition, GMV were the big thing. I think now they have understood the business. They're talking about, ROCs, they're talking about return to profitability, they're talking about cash flows, and that's why you're seeing these stocks re-rate. So I think that sanity has creeped into that side of the business that, theek hai, mera itna loss hai, but let me at least guide towards profitability and take the investors along. And I think that's what people are paying for.
Every time I click buy on the cart, I just look at the 10 rupee platform fee, the small cart fee, and all of those fees, and I still click buy, right? I mean, that's a habitual change.
So what I do is I see like, delivery is being charged. I need to spend a little bit more to save on the delivery. So every time I have to save that, 20, 30 rupees, I have spent like 200 rupees.
But thank you.
Thank you, Rahul. We have to call it a day because we have a very big company joining us. Maybe you want to listen to that conversation. We're going to be joined by Jairam Sampath of Keynes Technology in just a minute after this break. Have a brilliant 2025 yourself.
You also, Lata ma'am. Thank you so much, and to your entire team. Thank you.
Happy New Year. All right, well, let's take that break, come back on the other side, and we'll have the management of Keynes Technologies with us. Welcome back. The market has been holding up, not too many big dramatic moves, but the color is red now. That you have to take on board. About 0.4% down on the Nifty. So let's see if the bulls manage to come in at some point in time. But as we promised, let's move on to some of the companies that have had a rocking and roaring 2024. And Keynes Technologies is definitely one such stock. It's been one of the best performers of the year, surging over 170% in the last 12-odd months. Well, let's talk about the opportunities ahead. Yes, there's a lot of exuberance around the EMS space. There is the PLI opportunity as well. So what does 2025 have in store? We have Jairam Sampath, Chief Financial Officer at Keynes Technologies, joining in. Mr. Sampath, thanks for being with us. Season's greetings to you, and we really appreciate all the conversations that we've had with you through the course of the year. But you tell us that now let's talk FY25, and it's been a good year with Keynes, offering a lot of new tie-ups, expanding. So as you're looking to close out the year, what is the overall revenue growth, and what is the visibility in terms of all the newer projects that you're in right now?
Hey, good morning to you and to all the viewers. Season's greetings. Yeah, this year has been a good, successful year because despite half of the year being taken up by, I'm talking about the financial year, being taken up by elections and some little uncertainties on the political front. Still, we have been able to turn out a reasonably good result, and I think we will carry our guidance through this year. This is like a 3,000 crore turnover with 15% plus EBITDA. And I think the prognosis for the coming years is pretty good. And we have also embarked on a few, let's say, strategic moves now to make sure that we continue this growth story. So we have an aspiration of reaching on our 40th year a $1 billion mark. That's in FY28. And of course, we are now keenly thinking about what happens beyond that. So the moral of the story, I think, here is that we need to like work for the future and make an effort to carve the future. I think chances become brighter then. So we give kind of 3 years ahead planning, 3 to 4 years ahead planning for whatever we have in store. So up to FY28, I think we have fairly good visibility. We have 2 new businesses that have been launched. That's the OSAT piece and the PCB fabrication piece. And yeah, so a lot of work to do, but I think overall, I would say it's a very, let's say, aggressively demanding market. That means you have on one side demand and supply gaps, which are increasing. On the other side, a lot of execution challenges because the country is going through developing capacities and so on. So I think it's good news, good problem to solve. And as we go into the next several years, I think you will see similar work going on.
So Mr. Sampath, the revenue, last time we spoke, you said revenue for this year is 3,000 crores. Now, as we're almost ending Q3 as well, do you have more visibility? Could we say, could it be 3,200 higher? We just want to kind of go back and check that number with you.
Yeah, no, I think any higher guidance would probably come in the last quarter. When we complete this quarter, then we will probably know this. So, yeah, I think also we always believe that it's not the quarter that matters, it's the long-term growth prospect that matters. So we kind of, now our sights are trained on what happens beyond FY28 because the growth has to be ensured through actions now. And yeah, I mean, be as it may, order book is strong. So by FY25 end, maybe it will be even better probably. But I don't want to put a number to it right now. Let's do it and then we can meet up.
Mr. Sampath, since you have visibility till 2028 and you're guiding for $1 billion of revenue, is there scope for you to expand margins from here on, from the current 15% by 2028? And what would the revenue breakup be between PCB, OSAT, and the traditional EMS business?
Yeah, so like I have previously said, that the margins depend on two aspects. One is the mix of our businesses, and the second is the operating leverage that we get. So operating leverage contains in itself our plans for spending extra money for getting new projects on board and so on. So if you were to look, take a careful look, let's say we are assuming we have to make some assumption about US dollar versus rupee. So we are saying it may be about 90 rupees. So about 9,000 crores is the total number that we are talking about, and of which we have visibility for more than 7,000 crores in the EMS space, about 1,500 crores in the OSAT business, and about 500 plus crores in the PC board business. So as we go nearer to FY28, maybe some of these numbers will go up, perhaps. So let's see. And this will be margin accretive because the other two businesses bring in tad higher EBITDA number. And so I think you can see a upward movement on the margins.
Okay. Oh, that's good to hear. Jairam, how do you see the next package of the PLI coming in? The electronics, apparently a 40,000 crore PLI. Are you throwing your hat in the ring? And will it give the same margins as the previous? Because I believe there are a whole lot of Pidilites and Sanjeev Goenka and a whole lot of new groups who are going to be competing here.
Yeah, I think that's a welcome move. See, 40,000 crore, you must see it as, let's say it's 6% of the total, roughly 6% of the total sales that they expect. So that would mean a huge amount of, 40,000 crores of investment they expect. And that would mean a huge amount of sales that's going to come through. And newer groups coming in will only strengthen the industry. So as far as components are concerned, in our case, it's the PC board, which may probably be covered in this. Of course, the details of the schemes are yet to be announced, but we expect the PC board to get some, both in terms of subsidy and in terms of, let's say, incentives coming in. But on the other hand, while these are very encouraging things from the government side, government is doing all it takes. I think the individual players also must throw their hat in the ring of the technology and make sure that over next 3-4 years time frame, take advantage of government schemes, but make sure that you are able to stand on your own with better profitability and better, let's say, competitive strength in front of all the global majors who will probably be flocking into India shortly. And so it will be a technology-led, let's say, renaissance or resurgence or emergence, whatever you call it. And yeah, I think all these new players have to come in because electronics is becoming not just an industry, it's almost like a horizontal, almost in every industry.
No, I take your point. Jairam, just if I can squeeze in a quickie, since we're running out of time. Are you also on the verge of signing up with any of the majors? I mean, we just heard Whirlpool signing with PG Electroplast. We heard just previously Dixon with Vivo. Are you continuing in those verticals? And if yes, anything we should hear?
Yeah, so in our case, the large let's say, ventures, etc., would not be in the consumer space. It will be non-consumer space. But we do have a couple of them coming up, and you would probably hear in FY26 some good news on the OSAT front too. We have almost very close to acquiring a very large, let's say, client who will be an anchor, both in the legacy packaging as well as advanced packaging. So in some sense, the destiny is helping us. So we got to make the best use of next 5 years that we have with an aggressive market demand, So we are working hard on that.
And you're on track. Mr. Sampath, I remember, I think this was a conversation we did around Diwali when you explained how for you, it's not just the legacy OSAT, which is a low margin business. You're going to be sort of aiming for the high margin business as well.
Yeah.
So are you on track? Because you told us that you should be up and running by the first quarter, and give us a sense of investments as well. Total capex outlay for the overall business, and specifically on semiconductors. But how much cash do you have? How much are you going to be spending next year? Some idea.
Yeah. So on the three businesses, as far as the EMS business is concerned, roughly 7.5% of our total sales will be investable as a capex, and that would be generated from within our business itself. That's EMS piece. Because we do have a good plan of OCF. So I think we'll be able to self-fund that EMS business. As far as the semicon is concerned, it's a 3,400 crore capex. And this capex will roughly get done, 50% of the capex will be spent by FY27, and another 50% will be spent by FY30. And so these will obviously accrue businesses worth about 4,200 crores by FY30. And as far as the PC board is concerned, it's a 1,400 crore capex. And we hope to complete at least half of it by FY26 end, and then further enhance capacities in FY27-28 timeframe. Almost pretty much the PC board business as well as OSAT business will go step in step. And so these are the layouts, and we have already done for the projects. So we are on the way.
Okay. We'll leave it at that. Jairam, pleasure having you with us, and let's hope that 2025 is going to be equally brilliant for you and for Keynes. Thanks for joining us.
Thank you.
Well, we have to jump to our next guest who is waiting by. Muthoot Finance is the management that's waiting by. They have revised their loan growth guidance for FY25 to 25% from 15% earlier. To discuss these and more, George Alexander Muthoot joins us. George, thank you very much indeed for joining us on Christmas Eve. If George is obliging, that's very kind of you. So a happy Christmas and a New Year to you.
Certainly a happy Christmas and New Year to all of you also there in Bombay. So
yeah, good. Good to hear that. So clearly business is taking precedence. Why have you revised it higher? What makes you so optimistic? Your loan growth numbers?
Because the Q2, we had already reached 18% growth by Q2 itself. So that makes us more confident to revise the guidance from 15 to 25. And probably we will again revisit the guidance once Q3 is also behind us.
Okay. There is a bit of a contradiction in the news that we are getting from media and from the industry. We just heard that Reserve Bank is hurrying people to do gold auctions in cases of default. Are there more gold auctions at your end as well? So should we be worrying about defaults?
I think there is some lot of misunderstanding there.
Okay.
Reserve Bank has never asked anybody, not for that matter, for any of us, to do auctions quickly. Never. I think by doing an auction, we are doing an injustice to the customer. So only when there is a loss, etc., or when it is NPA, or the customer is not forthcoming, we should see auctions. Auctions should be seen only as a last resort.
But are gold auctions, are gold auctions generally rising? I mean, with or without, let's take out the Reserve Bank angle. But are there higher incidents at auctions?
I think our auctions are almost nil. Almost very, very bottom. We're doing very little auctions because the gold price has gone up, and there is no need for the auctions because we are always in the money. We're always in the money. The LTV is 75%. Today, our average LTV is only less than 60% because the gold prices are going up. So customers who have not paid interest or interest payment, etc., no due, etc., their money is still there. So we don't need to auction this gold. Actually, auctioning is actually a crime which you are doing to the customer because this precious ornaments, these are all ornaments, not gold, bullions, etc. So precious ornaments should not be auctioned.
Got
should
it.
be seen as last resort only.
How do you see, sir, your net interest margins going ahead?
Net interest margin, we have always maintained that at the same level of about 9 to 10%. I think it will remain there. For some time, initially, if there's a higher cost of borrowing, etc., we try to absorb it. But after a while, if it is going higher, we just raise our yield. But finally, we would try to maintain our net interest margin.
And okay, even your asset quality in Q2, sir, deteriorated marginally. So gross NPAs went up from 4% to 4.3%. In the month of October, November, and almost December, how has the asset quality been?
So when you say asset quality, don't link it to the NPA. Asset quality and NPA is entirely different for a gold loan business. The asset is always gold. It is good quality gold. So the asset quality has not changed. So what we are giving is, as you said earlier, when we don't do aggressive auctions, the NPA may come up slightly. But since we are always in the money, we have never lost even 1 rupee through this by auctioning an NPA account, because we get our principal, we get our interest, and the most important thing, we are able to help or maybe support the customer. That is a big
That's just banking jargon.
This confusion about RBI asking some people to auction, I think it is a misstatement. Definitely a mistake.
Fair enough.
Are you going to be auctioning a little more than what you were? And I think the NPA bit that we kind of also want to understand is the MFI, because that's where there has been concern about how long will the pain last, are collections getting better or not. So just tell us a little more about the MFI piece and when you see a recovery there.
What I was saying earlier was fully about the gold loan business. Correct. It is fully secure. There is no issue there. Our guidance, etc., is for the gold loan business, not for the MFI business. So MFI, yes, it is going through a rough patch now. Last 2 quarters, it is going through a rough patch. Even our MFI, Bazaar, I think their growth, etc., is flat or maybe little reduced only. They have an AUM of about 9,000 crores. I think in the next 2 quarters also, the growth will be flat. I think they are refocusing on collections and maybe making the book a little more better. As far as any MFI, this is a tough time, tough period, maybe another 2-3 quarters or 2 quarters at least, it will be like that. After that, things should improve.
But to protect Belstar's balance sheet, would you consider consolidating it with the main Muthoot business itself?
No, I think it's a subsidiary. We are thinking of going we actually have got approached for an IPO. So it will remain as a subsidiary. We don't want to, there's no need to protect it. It is on its own. It has good capital adequacy. It has good funding. It has good quality assets also compared to the peers, compared to other NBFC, other microfinance. Belstar is mainly focused on self-help groups. So they are SCNA. They are more on the self-help. They do join
No, Mr. Muthoot, there is an interpretation or a understanding that because people at lower levels are running out of income or incomes are falling, they are resorting to more gold loans because that's the last resort. And that ties in with the fact that, in the MFI space also, there have been more defaults. So are you seeing pain at the lower end? People unable to return their money, but the loan is good because the underlying jewelry is still yielding more value.
So I think don't look at it that way. We are looking at it as something else. That see, at the lower level, at some level, rural level, etc., people are not getting the funding. Not only MFI, even the personal loans in cities, they are little hard to come by. In the last 2 quarters, you have seen that banks and NBFCs are going slow on personal loans, unsecured loans. I should say unsecured personal loans,
So that's why
the non-salary. So we feel that we are actually helping customers in doing that. Of course, we get the whole business out of that, but then it is putting purchasing power in the hands of people. Is where we feel we are doing a service to the society.
So Mr. Muthoot, finally leave us with a guidance, if you can, on how gross NPAs will move, a number, because you've always said this in the past, that you are not inclined to quickly go off an auction. You want to give your customers more time to pay. So since you're not going down that road, no matter the nudge from the central bank, your gross NPAs are above 4% right now. Will they continue to trend higher even by the end of the year?
I think it should remain at that level only. We will persuade the customers to make either take back the loan or award an auction. And if worse comes to worse, if customers are not coming at all, then last resort we'll go for an auction. That's the last resort. So the
but NPAs will be above 4%. But above 4% by the end of the year.
In that level. Okay. Yeah.
Okay. So just one quick question. The recent guidelines on leverage, the 3 loans per person, is it only for incremental customers or for all customers starting 1st of January 2025?
I'm not very sure. It is regarding microfinance. I'm not exactly sure about it. But I think for microfinance, it is 3 microfinance loans per customer, what the general understanding is.
Okay, we'll leave it at that. Thank you very much, George Alexander Muthoot, for joining us. And here's wishing you once again a very good 2025.
Thank you. Wishing you all the same.
Thank you. Okay, we were speaking about microfinance. So as we have been discussing, the sector has witnessed a lot of pain in calendar 2024 and is expected to remain under pressure, as Alexander Muthoot said, probably for a couple of quarters more. What are the factors? What are the pain points? And how are things turning? First, we are going to have Abhishek with some details.
Rural economy came under great pressure during the large part of CY 2024, especially in the microfinance segment. Now, the sector is expected to see pain in its business going into 2025 as well. Let's look at the numbers. The AUM growth or the loan growth, which was more than 26% year on year last year, has declined to less than 9.5% this year so far. Now, growth is expected to further slow down as lenders battle various issues ranging from over-leveraging of customers to credit costs to asset quality pain, etc. The biggest impact has been seen for Spandana Spurti, ESAF SFB and Credit Access Grameen. In CY 2023, all these lenders had seen improvement in their asset quality, while asset quality has deteriorated in CY 2024 so far for them. X of Satin Credit Care, all of them have seen pain in their asset quality. Highest pain was seen for Fusion Finance. Now, amount-wise, these lenders saw their gross NPA decline by 32% on an average in CY 2023. But it has risen by 79% in CY 2024 so far. Now, massive rise was seen for Fusion Finance, Spandana Spurti and Credit Access Grameen with respect to asset quality deterioration. They also saw their stock price and valuations decline due to lowering of growth and deterioration in asset quality. So, highest decline in valuations has been seen for Credit Access Grameen, Fusion Finance and Equita Small Finance Bank as well. Marginal improvement seen in lower valuations of Ujjivan Small Finance Bank and Utkarsh Small Finance Bank. Now, stocks have underperformed Nifty this year so far. On a year-on-year basis, while Nifty has given a return of more than 17%, all these lenders focused in MFI segment have given negative returns ranging from as low as 5% to more than 62%. From 52-week high, Nifty has given a negative return of nearly about 7%, while these lenders have given negative returns ranging from as low as 31% to as high as 73%. Highest negative return is from Fusion Finance, Spandana Spurti as well as Credit Access Grameen. Let's look at the outlook with respect to 2025, which ICRA has laid for the sector. Stricter lending norms for microfinance shall improve the credit safeguards, but will pose challenges with respect to near-term performance of this sector. Now, borrower rejection rates are projected to increase further given the fact that 20% of the borrowers are expected to be impacted by the new guardrails that have been put in place. NBFC MFIs, their AUM growth will compress to 0 to 5% range in FY25, while it was at 29% in FY24. Credit cost is expected to be between 5.4 to 5.6% for FY25, which is on the higher side, which along with an expected margin compression shall impact the bottom line or the profitability of the lenders in this sector. The sector has challenges stemming from borrower leveraging, socio-political disruptions and operational challenges as well due to largely employee attrition that's been seen in the players. Now, there is significant downside to the near-term loan quality of this sector as well. Return ratios like ROA can decline massively for lenders in large part of 2025. They are strongly capitalized, so incremental capital requirement will be low due to expectation of slowdown in loan growth rate for them.
Thank you, Abhishek, for that. To take what Abhishek was saying, talking about the stress in the industry, how growth rates are likely to slow down to just 0 to 5% in FY25 versus close to about 29, I think more than 25% last year. We have with us Alok Mishra, CEO and Director of Microfinance Industry Network, MFIN, and Aishwari Khandelwal, Associate Director at India Ratings and Research, joining in. Thank you very much, both of you, for joining in, and season's greeting to you. Mr. Mishra, if I may start with you. For a while now, we've been talking about the stress in the industry and how the stress has only accelerated. What is the latest, say in the month of December? Has December been worse than November? And what is the guidance over the next, the near term now, 3 to 6 months?
Thanks. For November and December, we don't have the credit bureau data on which we rely and publish our publications. But I keep interacting with the CEOs, our member CEOs, and what I get to hear is that December is better than November, and later half of November was better than the earlier part of November. So I see signs of stability there. But I would be able to say that only when I get the credit bureau numbers of December. But the field situation seems to be improving, and especially in December.
Okay. Good morning, Mr. Mishra. Thank you very much for sparing time for us. You all have recently advised even stricter rules, right? The cap of 2 lakh rupees, and I think only 3 loans per person instead of 4. Were those the new rules?
Yeah. Let us see that in the guardrails 2, which we released on 15th of November, there were 8 items, out of which 6 or 7 where what I would say, a reiteration of the existing norms to be follow a stricter implementation to strengthen underwriting. On the loan side, what we have said is that in the July guardrails, we had said 2 lakh rupees of maximum loans to a microfinance borrower, in addition to the repayment obligation of Reserve Bank. Now we have said that 2 lakh, which is also a regulatory norm, should also include unsecured retail loans, because we see retail overlap. And on the 3 loans part, we have said not more than 3 lenders for a microfinance customer, 3 microfinance lenders.
Yeah, got it. Now, obviously, this is prospective. Or are you expecting your members to just wait for the others to pay back their loans? Are you forcing existing 4 or 5 loan guys to come back and reduce it to 3?
Yeah. So the expectation is, for example, if you suppose I am a microfinance customer and I have got 4 loans, the customer obviously has to bring it down to 3. 4 lenders to 3 lenders, and then only then if he further goes down to 2, then he can get another loan. So the persons who are in excess of that will have to reduce it. And there is a common perception that people are saying that we are drying out the liquidity. We are not drying out the liquidity. It impacts only 7 to 8% total customers. And there also, if they reduce their leverage, which is good for them, they can again get fresh credit.
Got it. Okay, let me get Aishwari into the conversation. Aishwari, you all had a very good report in August where you highlighted the problem of higher number of loans per person and higher defaults. What is the current situation? It's about 5 months since your old report.
Right. So I think, we have seen all seen the Q2 results. I think Q3 is expected in terms of the delinquencies. Q3 is expected to be the peak in terms of the delinquencies. In terms of the normalcy, if we talk about Q4, we could see some improvement in the collection efficiencies, but getting back to the normalcy. Normal collection efficiencies going back to the March 24 levels. I think that's a prolonged time we would see another 2-3 quarters or so when we could see the collection efficiencies getting back to the March 24 levels. So we see a prolonged recovery in terms of the collection efficiencies. So Q3 is expected to be the peak in terms of the delinquencies because the collection efficiencies have stabilized in Q3, but it has declined from us. It has declined from March 24 numbers to September 24 numbers.
Aishwari, can you give some numbers? Aishwari, 1 minute. Can you please give some numbers? When you say it has declined, how much, what is the current number? And how much do you expect it to improve? And exactly by when? By June, by October, when?
So collection efficiencies have declined by around 250 to 300 basis points, depending on the
MFI.
Entity to entity. But yeah, improvement. This collection efficiencies numbers improving back to around 98-99% levels is expected to be a prolonged recovery from here now.
Okay. Mr. Mishra, would you want to comment on that? Do you think that collection efficiency comes back to 98 by June, by September? What is the sense you are getting from your members?
Yeah. Well, I would not get into numbers because that's for the rating agencies and institutions to give. But I see that, it is difficult for me also to hazard a guess that, the fellow panelist was saying, that it will take 2-3 quarters to return back to normal. Because what I have seen in the past experience is that that the stress comes to microfinance sector first, and it recovers also faster than other sectors. So what time it will be, for example, now we started talking of stress in May and June when the collection efficiency dipped. And now after 4 or 5 months, by September or October, you're reading news items of stress on other sectors also, like retail loans or credit card loans also. So we gave the first alarm, and I think we will recover also faster. But whether it will be 1 or 2 quarters or 3 quarters, that is difficult for me to say. But yes, things are on an uptick.
Okay, so will the third quarter, as Aishwari says, be the worst quarter in terms of stress? We should see it declining in the next quarter, you think?
Yeah, because under the expected credit loss method, the most of the top NBFCs, MFIs are there because they would have crossed 90 days starting from May, and the provisions will come in.
Fair enough. Thanks a lot for that, Mr. Mishra. Out of time, and Aishwari, for improving our understanding. This third quarter will perhaps still show, the results will show stress, but it should hopefully decline from there, is what our guests are telling us. Well, on that note, it's time for a break, and we will come back with our technical experts, and we'll also have Manisha on commodity trades. Welcome back. Markets still in extremely range terrain with the Nifty Bank indicating some red. Let's invite Mitesh Thakur into this conversation. Mitesh, good morning. What's the 10 o'clock trade?
Morning, Lata. So nothing on the index because, I still believe we are just chopping around in a range. But on the stock side, Indigo is something, which has caught my eye today. And Ipca Lab. So Ipca I would want to buy once it crosses 1605. It's trading around 1600 levels. So buy about 1605, keep a stop below 1577 and look for a target of 1650 to about 1660. And Indigo is the other one which I would recommend buying with a stop below levels of 4470 and look for a target of around 4700 here.
Thank you very much for that. By the way, all the Tata Group stocks are active. So Tata Investment is now up 11%, Tata Chemicals 3%, Tata Motors has now moved to the pole position in the frontline pack, 2% higher, Tata Elxsi, TCS, all up more than 1.5%. So the pack is outperforming. But it's time now to talk commodities. Manisha is joining in. Manisha.
Well, thank you so much for that. It's almost end of the year and we've seen volumes continue to decline, and that would happen even more as we head towards the Christmas Eve today. I want to take you through on what we've done in 2024 in sense of non-agri commodities, and I'll start with energy, where we are closing this year in the negative there. As you can see, Brent has declined even more than what the US crude prices have done, and it has been a declining spree for heating oil, coal, natural gas prices. Everything to do with crude and crude products has been on a weaker side, barring natural gas, because here the markets are still looking at sanction concerns. It is still below 5-year average in sense of inventories, and there are concerns between a pipeline flow from Russia to Ukraine passing via Europe, and is the reason you've seen 60% of gains come in for the natural gas prices. But as you can see, everything else in the 2024 has been in the negative when it comes to energy as a sector. I want to take you through precious metals now, and here is what you have better gains coming in. Gold and silver prices, more than 25% of gains coming in for this one. Can't say the same about the other PNG metals, where you have platinum and palladium prices down between 4 to 5% there. But gold with 27% of gains and silver by 23%. We have seen all-time highs into this one in the Indian markets, whether it has been about global central bank buying, geopolitics, dollar index, even as it has been trading at 2-year highs, we have seen gains continue in case of gold and silver. That brings me to non-ferrous metals now, and here as well, while we are looking at gains for most of these metals, but the markets are slightly jittery now as we get into the new year, especially with trades and tariffs and China lack of clarity, all of that keeping prices on edge there. But copper and aluminum have gained between 4 to 6%. Outperformance within the metal space clearly has come in from zinc, 13.5% of gains there. The other metals like nickel and lead actually are clearing or closing this year into the negative there. Talk about the ferrous metal prices, and here everything is in red. The steel prices in China and US have declined quite sharply, and so has been the case when it comes to steel as well. We've seen 18% decline in China and 38% of a downfall that you've seen come in for the US markets as well. Here, China was a major factor, and since we did not see good numbers coming in, the construction and the property sector still rolling under a lot of pressure, we are looking at that immediate impact coming in for prices here. Well, as I said, 2025 is going to be quite interesting to watch, because it is going to be about what OPEC and non-OPEC do for the energy markets. It's going to be about Chinese demand, EV, and it also is going to be about on what we see in sense of adoption when it comes to decarbonization. The markets will also watch out for the US tariffs and sanctions on what countries and how much, and that calculation will clearly come in by the first quarter of 2025. And then it is going to be about China stimulus, US tariffs, energy transition. There is just so much to watch out for in 2025, but all of this will have to wait until the first quarter of 2025 on what Trump does. What is the kind of reallocation that we see in various asset classes will tell us on where the money really starts to move. Dollar is going to be quite an important thing to watch as well, because we're looking at 2-year highs right now. Most of the major currencies, high-yielding currencies, are closing this year into the negative. So this is going to be an important one. For gold, global central bank buying is going to be a theme that we will want to watch. The last 3 years, including 2024, there has been near record buying there. The geopolitical tensions is going to be another thing. And then it also is going to be about central bank buying, geopolitics, investment demand, which has been a theme in 2024 with the kind of returns that gold has given you. It's something that we will carry on as a thing to watch in next year as well. I quickly want to take you through some last few plates on what the global banks and brokerages are putting out in sense of prices for 2025. This is for Brent, and as you can see, it's a big range. In any case, for this year as well, we've seen a range of 90 on the higher side and 70 on the lower side. So it has been a $20 range, exactly what we are getting into 2025 with. Citi is most bearish. They expect oversupply and higher supplies from non-OPEC as well. And then EV adoption in China has been higher. The other banks and brokerages, as you can see, are looking at prices between 65 to 80. UBS, of course, clearly seems to be the most bullish when it comes to the crude oil prices. Take a look at gold, and here everybody is bullish. The least bullish is perhaps Bernstein, and we've seen UBS talk about below 3,000, but 3,000 really seems to be the most favorable consensus number there coming forward. So that means another all-time high could be coming in for gold. Silver, while we saw all-time highs in the Indian markets, but the global market saw a 12-year highs. Next year could be a build-up on that. This year high has been 34. So we are looking at higher build-up in the next year. $38 to $40 on the higher side is an expectation for next year for the silver prices. And finally, copper should come in on your screens. And while this year saw an all-time high, but from the highs, we're down by nearly 16%. For the next year, it perhaps is looking at even more bullish. So currently, while the prices are trading at around $9,100 a ton, $9,400 is what Bank of America expects. But JP Morgan, Citi, Goldman Sachs, UBS expect 10,000 to 10,500 on the higher side for next year. So some bullishness continuing here.
Okay. Thanks a lot for that, Manisha. I know as a commodity expert, you like to sound bullish, but we are glad that you're not so bullish on crude. Thank you very much for that exhaustive and comprehensive overview. We have to take a quick break, and thereafter, it's our special segment, Outlook 2025. We are going to speak to the best of fund managers you would like to listen to. Samir Arora of Helios Capital joins us on how the markets may pan out in the coming year.